All right, well, the market is now surging, and really this is, if you see the intraday chart of the Nifty, clearly the market was watching out for that 8430 mark. As soon as that 8430 was breached, Ekta, look at that. This is what I was referring to. You know, this 40 points is short covering, because what's happened is that, you know, normally traders go into these markets with certain stop losses and certain targets. In this case, the stop loss clearly was 84.30 for any kind of short trade, which was yesterday's high. What today has done is it's broken the sequence of lower highs for the market, for the Nifty and also for the Bank Nifty, and that's why this 30-point incremental move is purely on account of short covering. It could be even more towards 8500 if short covering bounce has to continue. Let's pull out some of the stocks intraday and see the charts. Reliance, that stock clearly leading the market rally right now. It's corrected quite a bit, but now trading at high point of the day. HDFC is the other stock that you would expect on a day like this to surge, and that stock also looking quite good right now, trading at the high point of the day. So 28,000 is almost here for the Sensex. This looks like a big short covering bounce on a Friday with the kind of losses that we're seeing. But time to welcome our market guest then. Mayuresh Joshi of Angel Broking is with us. Mayuresh, good afternoon. So good morning rather. So what's the call at current levels? Would you go long, or is this a profit booking opportunity?
Morning, Anuj. I think clearly with all the tenets that we've got in place, the markets have reacted accordingly, specifically on the domestic issues related to monsoon, the washout that we've seen, weak corporate earnings, the Chinese yuan devaluation not helping on the international side as well. So clearly, I think the broad range that we're working for a length of time, I think we continue with that range, 8100 to 8600 on the Nifty. But our belief is that one should really have a bottom-up approach in these markets, be stock-specific, see whether the earnings have come out really better in this quarter and whether the earnings outlook looks much better over the next few quarters. So I think stock-specific approach is the way we see in these markets.
Okay. Mayuresh, how would you approach maybe a couple of these metal stocks now? For example, Vedanta is seeing a bounce back today, but if you look at it on a week-to-date basis, it's lost 17% of its market cap.
Morning, Ekta. I think clearly the metal counters are going through a cyclical downturn. The commodity downturn has hit the stocks very hard. So the Chinese demand-supply situation is not helping. The realizations have come down in a big manner. Just to cite an example, the hot-rolled coil prices in terms of landed costs have come down from $622 a ton to $470 a ton. And that's been a matter of a few months. So in that sense itself, I think realization is expected to remain weak. The kind of capex plans that a lot of these steel companies had undergone, I think the utilization levels are not catching up, which effectively means that the working capital requirements are looking stretched. The cash flows are not expected to improve. So I think I'll be looking at all these moves on these counters more to do with the trading bounce. Fundamentally, I think the story still remains weak. I think unless we see signs emanating of an imminent bounce back, at least in terms of how the commodity prices move and the commoditized nature of their businesses, I think the cash flows are expected to remain muted for the better part of FY16.
Okay, so let's talk about some stocks then, Mayuresh. Any two stocks that you like in the mid-cap basket that you would like to recommend?
So there's a couple of stocks that we like in the mid-cap space. One of them is Bajaj Electricals. The company did post a good set of numbers, specifically on the E&P side of the business, which was a laggard for Bajaj Electricals. And our take has been that the turnaround would be quite evident in this segment over the next 2 years. So the EBIT losses, specifically on the E&P side of 87 crores that Bajaj Electrical had posted for FY15. Our take is by FY17, it should turn into EBIT profits of close to 96 odd crores. The EBIT margins have surprisingly held up well for the E&P segment at 5.8% for this quarter. And our take is that with all the three segments contributing meaningfully over the next few quarters, including consumer durables, which had quite a tepid show in this quarter, and the lighting and luminaire segment, which has a lot of thrust in terms of government processes and reforms, I think the combination of these businesses should ensure that the top line grows in excess of 12% on a CAGR basis. So our take is that the losses that Bajaj Electrical had posted in FY15, it should actually post decent profits in FY17, anywhere between 120 to 122 odd crores. So this remains one of our top picks. The other stock that we'll probably like is Inox Wind, and I think it's one story which again I think has a lot of government emphasis. 60,000 megawatts of renewable projects being talked about, and clearly I think in terms of top line growth, Q1 was exceptional. the kind of order book it has got, 1250 odd megawatts, and the kind of sites under acquisition, I think that gives a very healthy visibility in terms of revenues to come. Top line growth, in our opinion, is expected to grow at a CAGR of 48-49% over the next couple of years. No royalty payment from FY16, and clearly I think the motor blades or the rotor blades that we are talking about, the diameter size is expected to increase from 93 meters to 100 meters, which would improve realizations as well. Timely capex, I think they're increasing their capacity in Madhya Pradesh, which will also enhance in terms of execution of their order book. Valuations also not expensive, and we expect margins to land anywhere between 17.8 to 18.5% over the next couple of years. Valuations not looking expensive at this juncture. Again, I think earnings should improve, as I said. So INOS also remains one of our topics.
Okay. Mayuresh, how are you approaching PSU banks? And I ask this in light of the fact that there could be some more reforms which could be announced for them. This is after the recapitalization was increased for FY16 as well as for the next 4 years. In terms of the reforms, what would you like to see, which would be top of mind according to you for PSU banks, as well as whether you would then approach them more constructively?
So clearly, Ekta, I think the story for the PSU side has more to do with how the asset quality pans out. The recapitalization has been welcome news for a lot of these PSU banks, and they have accordingly reacted. But clearly, if you see the trend in these quarter numbers, a lot of them have grown extremely slow in terms of credit growth and lending. And when it comes to asset quality, I think it has stabilized for a few of these banks. But again, I think the core internals remain weak in our opinion. Yes, the recapitalization will help their capital adequacy, shore up the return ratios. But again, it's a long drawn process. The appointments of a few of these posts which are expected to get announced today, I think that will be a breather for most of these banks. But in our opinion, I think the internals still remain weak. If we do not see signs of capex recovery and the investment cycle recovering sooner than later, the working capital requirements for a lot of the lended sectors that these banks have catered to, steel, aluminium, metals, iron ore, SME sector, real estate, sugar, I think they'll still be under some amount of stress. So in our opinion, I think within the space itself, State Bank is something that we continue to prefer. Capital adequacy remains strong. The numbers have been quite decent in our opinion in this quarter around. And again, I think the return ratio should improve for State Bank if the capex cycle recovers. And that is a key parameter to how the public sector would perform. So in our opinion, I think State Bank is something that we'll continue to prefer within the PSU.
What's your call on some of these telecom names like Bharti and Idea now?
So clearly, Anuj, I think they are going in a trajectory of their own. The spectrum payouts would affect their cash flows from a medium to long-term perspective. From a short-term perspective, yes, I think the numbers have been reasonably better. But clearly, I think in the case of Bharti, I think highly leveraged. I think the performance has been quite decent, as I mentioned, both in terms of RPM, how the ARPUs have panned out, the MOUs, the kind of contribution that data is expected to make, and the consolidation of the industry that we've seen. But our take is that the kind of leverage that they've taken for the spectrum payouts will have a hit on the return ratios. And again, I think one really needs to see how Reliance Jio comes out with their plans. So if there is some aggressive planning that Reliance Jio does, I think they'll accordingly have to adjust their pricing options as well. So it's a wait and watch on the telecom stocks at this moment of time.
Okay. All right, Mayuresh, we leave it on that note. Any disclosures?
Ekta, the stocks we've discussed, I do not have any personal holdings, but we may have clearly discussed all these stocks with our clients.
All right, Mayuresh, we leave it on that note. Thanks very much for joining in and talking to us. Some news on Vedanta, so keep that stock on your radar.